Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny, and today we're going to talk about some of the Michael Burry's tweets about the banking and finance sector over the last couple of weeks. This really wild markets unrolling, and he just took a direct shot at J Powell yesterday in his most recent tweet. I want to talk about that one at the end. Yeah, I know, right?
Ooh, okay.
Two stupid guys trade stocks.
I did not know he took a shot at J-Pow.
Yeah, yep,
Oh, boy.
yeah. Pretty much, it is inferring as such. But before we get to that part, we want to talk a little bit about some of the other things you said over the last couple of weeks about, this chart here. We did a separate video talking about this when it first came out, breaking down the CET1 ratio versus the number of percentage of insured deposits for these banks to kind of help you gauge a little bit of likelihood of bank run risk a little bit, so you could kind of put these banks in perspective to each other and see why SIVB and SBNY kind of were the ones that really fell so abruptly, and all banks were getting destroyed, and some of them really didn't deserve to be lumped in quite with that, if you will. So I know
Yes.
Dylan made a couple moves based upon this. I made one myself.
Yeah. You can see a previous video. We go really in depth through it, but I bought Schwab, which is not on this list, and I bought a very small amount. It's just like $1,000 on PACW because
Nice.
it does not make sense. If you see the video, you'll see like how much it's fallen. It's fallen as much as FRC and WAL, which are not in the same sectors, if you will.
Yeah, exactly. It's a little ambiguous whether or not certain aspects of this kind of chart matter, right? Because like that $250,000 deposit limit was temporarily waived by the FDIC and Treasury and Federal Reserve all working together. So it's kind of a little, does it really matter at this point? But it's still, I think, is a good kind of gauge of like where the appetite for risk was amongst these banks.
Agreed.
And then he gloated about it when these banks, started to outperform a little bit, like 2 days later. Did you
Yeah.
see that?
Okay, here's the thing though. You take any stock, like even Nikola, which is crap, when it drops an insane amount, people cover like within a couple days to take some gains. So this
Yeah.
could not be even close to over, but
Yeah.
you know.
I know, right? For like a value oriented guy, this was such a short term thing that it was kind of like, you were right this time. Okay. Someone, what was the commenter we have that talks about him as the gnome, the
Yeah,
butter
that
gnome,
guy's
Michael
funny.
Burry?
I like that guy's comment.
Um, and then he did have to come out and kind of correct a little bit of basically, there was actually, it's funny, like I feel like it's so stupid that we like talk about his tweets here, but there are literally publications out there that are writing articles in financial like kind of publications here about his tweets, and then he's like trying to correct one of those. He's saying
Yeah.
like, yeah, I wasn't trying to say that, but
Well, so you can't just look at one aspect of something. So, and correct me if I'm wrong here, but like the unrealized losses, for instance, they're unrealized for a set amount of time depending on the contract, but that doesn't mean that how do I explain this? They're not going to be unrealized. Like they're not going to lose all that money. They just have a deficit in between now. But if they have tons of liquidity, there's no issue. There's no problem.
Exactly. It's only if they have to quickly raise money when they don't have the option of that Fed window that they opened where the Federal Reserve is allowing to borrow at par value. We could have thrown in a separate chart in this. We can do one of our videos tomorrow that, that remember we talked about that little spike in the Federal Reserve balance sheet. It
Yeah,
continued to go up even more this week.
great. That was a
Yeah.
horrible explanation on my part of what I was trying
Yeah.
to say. Thank you for saving me.
Yeah, and I am not a poet, but this one was funny to me too. Here, one chart, a couple data points, such cannot encapsulate all a bank is.
Beautiful.
It's such a Burryism.
It's definitely better than what I just said. But it makes
Yeah,
sense
I
what I
know,
said. I
it
couldn't
does.
articulate.
Yeah. So this is where he was directly taking a shot at Powell. He calls him out, like I said, this is as of yesterday, saying he should have just said I do not know for the entire press conference. Like, for what is he, Bill Belichick all of a sudden?
Okay, hold on. I don't know if this is a shot at him because okay, if I know that you watch it, if anyone else has watched the actual Jerome Powell, he does a speech and then he has to sit for questions. I think this could be a shot at the people asking the stupid and just repetitive questions over and over and over. Because it's like, so yeah, I know you just gave us all this data. Cool, cool, cool. Gonna do another rate hike next 2 months? And he's like, yeah, probably. Okay. After that though? And it's just like the same question over and over and over and over, just repeated in all these different newspapers. It's like, why? Just listen to the friggin' speech. I don't know. I think that could have something to do with it.
The market's pricing in one more rate hike, and then cuts for the rest of the year. Do you still think that's accurate? Because your chart today that you put out says that doesn't seem to be accurate. But we're going to ask that question directly.
Yeah,
too.
at no point has he said that he's going to cut in 2023. That's never been said. But the question has been asked. He's like, oh yeah, no, they're definitely cutting in 2023. I don't understand why that keeps popping up.
So what do you make of this last line? Then we might get some real price discovery.
Oh, because I think if he, this is just speculation, but I think if he didn't have to, babysit all these people asking questions over and over and over, then we would get a lot more fear, and then we would just hit 300 on the SPY immediately, probably.
Okay, yeah. I do think that's what he's trying to get here is that, he's saying that the market is still being buoyed by optimism that really shouldn't be there. And if Powell were more blunt about the fact that they don't know how this is going to play out, particularly now that we have this added factor of the kind of financial sector tightening in terms of their credit risk, that's really a wild card that, Powell kind of commented on, but he also doesn't really seem to have an idea how severe it will be. He thinks it's worse than what the indicators were saying at that point in time, but you can't really go too much further than that. That's just his best estimate.
Yeah, and it kind of pisses me off because it's like the guy doesn't know, and there's no way for him to know. This is a developing situation, and people want the plan, a set, non-flexible plan for the rest of the year, and it's not realistic for all these multivariable scenarios that are happening right now, right? Yeah. So he's like, yeah, we did a 0.25 rate hike. Honestly, this credit thing could have been like an equivalent of another 0.25. You could articulate that or interpret that as this was a 0.5 rate hike. We're not really sure, right? But that just went right over the head of everyone, and they're like, all right, long Tesla, let's go. So.
Or I don't know, short Deutsche Bank apparently.
Sure, yeah. I don't know what happened here.
Now the headline of the weekend is whether or not Deutsche Bank is in any sort of financial peril here. The cool thing, I don't know if you've seen this chart here. So this is the credit default swaps. This is the amount of money it costs to insure debt from Deutsche Bank. And it's kind of hard to see here, but you see this spike right here?
My face.
Yeah.
Oh, geez. Yeah.
Yeah. Do you want to sit on that thing? It's a horrible EKG joke for those of you who work in
damn it! Yeah, great.
But this very real thing where this household name is down 24% in a month.
Yeah, geez, that's I wonder how many more of these are going to happen like the next 3 months, because every time you think that we're out of it, it's like, oh, another one bites the dust. Oh boy. And this has not bitten the dust, to be clear. It's just at risk.
Yeah, it's the talking point of the weekend, if you will. Who knows? Honestly, there are plenty of people coming out saying that it's fine. Some that you believe in, and some that are named Jim Cramer. Because when he says it's fine, good luck.
So wait, did he say it was fine like right before this happened?
So no, he's still at this point saying Deutsche Bank is fine. Don't worry, Deutsche Bank is fine.
Oh, really? Oh, so they're screwed.
Yeah, well, that's what this is, Mr. Jerome Powell here. Rest in peace, Deutsche Bank.
Yeah, this I kind of feel bad for him, right? Because he came out with what is it? I have it up. February 8th. There we go. February 8th, he came out with this list. And it's like Carnival, Royal Caribbean, SVB.
Yeah, I'm hanging out over SVB if you want to move me to the side. But yeah, if you don't remember, Cramer like 2 months ago came out with a list of his 10 conviction stocks, and SVB Financial was on there. Yeah, right before their bankruptcy. And of course, his best call of all time. Thank you to whoever made this chart, because it is absolutely perfect. I love it. We probably should have a whole series of them now that we have Bear Stearns and SVB Bank, and then I can't remember if he commented on Credit Suisse before their default.
I I'm going to say 100% yes, he probably did. I'm sure he said something. Yeah, or probably signature too.
Yeah, might as well. And he was actually wearing an FTX T-shirt during that press conference. I heard.
This is actually this is actually a good example. When someone reads and they're interested in a stock, and you see an analyst that says it's worth $100 and it's at 20, that doesn't mean anything, right? Because Jim Cramer is I just called two companies that don't exist anymore that said go for it, right? I'm sure Federal Republic Credit Union is also up there or something. So was it First Republic Credit?
First Republic, yeah.
First Republic, there we go. Yeah, analysts, they're just like me and Vinny. We don't know. We have no idea.
Yeah.
We're just along for the ride. There's no way to know.
Yep. All right, guys. Well, let us know. Do you think Deutsche Bank is going to be the next Bear Stearns? I don't know.
Oh boy.